Welcome in the deep analysis world. This indicator and trading system is a remarkable approach to the financial markets. Enigmera uses the fractal cycles to accurately calculate support and resistance levels. It shows the authentic accumulation phase and gives direction and targets. A system that works whether we are in a trend or a correction. Enigmera can be placed on top or bottom. Once the indicator is added, the Enigmera line will appear, showing the trend limit and the trend support. The next line is the deviation line. It shows the maximum deviation you can expect during this trend. The third line is the 45-degree trend line. When the price moves along this line, the trend is most stable. The line serves to evaluate the phases of the trend. The following two lines indicate the deviation from the optimal trend line in both directions. They help to identify the range in which the market can be considered to be moving in a sustainable trend phase. The final line displays the movement's target. It changes in different phases of the trend. When the cycle ends, a new one begins. Once the lines have been drawn on the chart, they remain unchanged. Therefore, wherever you place the Enigmera, you will see an accurate representation of the market's activity. Every touch of the price to the trend line is a signal for entering the market in the direction of the trend. Here we open our positions. We notice signals at the beginning of the trend at a very early stage of its development. The next signals can appear at any time in the market depending on the structure of the movement. Our goal is to close the opened positions when the price touches the target line. The system is designed in such a way that market entries and exits are extremely clear. Enigmera also has tools for trend analysis. These are the light blue dotted line, which shows the maximum deviation from the trend line, and the dark blue line, which always shows the 45-degree slope of the trend, regardless of how many candles are on the chart or what zoom we are using. We will take a closer look at the second tool. At the beginning of a trend, the price never crosses the 45-degree line. The market is in a weak trend. When the price crosses the 45-degree line and moves so that it does not touch it, we are in a strong trend. This is the most extreme move in the entire cycle. When the price moves along the 45-degree line and the values are equidistant from it, we have a sustainable trend. This is the point at which the market is said to be most stable. Knowing which phases of the trend we have been through will give you a clear idea of which ones are coming and allow you to prepare for them in advance. As we have seen, there are three phases: weak, strong and sustainable. When the market has gone through one of these, the next ones remain. Once all the phases have been completed, it is possible to make a final test of the whole movement. This point is illustrated in our example. A move can have 1, 2 or 3 phases. When all the phases are exhausted, a new trend follows. When you place the indicator on the chart, the support line appears. You can then visualize the target line. In this case, we have a target that has been reached. The trend ends when the target is reached, after which the correction follows. This is the heart of the whole market. These are examples of how the only thing that repeats itself in the market is the trend and the correction. Every day we see exactly that on a different scale. This is the market cycle or market fractal. Let's look at it more closely. What is typical? Every fractal has a beginning, an end, a target and limits that it cannot escape. There are two types of fractals: those that reach their target, as shown here, and those that fail. The purpose of any fractal is determined by its structure. It is logically linked to it, not to past price movements. What has happened in the past cannot be used to predict the future. And that is why it is of the utmost importance, when assessing the market, to look only at the cycle we are in. Any exit from this cycle, even unintentional, will inevitably lead to mistakes and losses. Here we have shown two consecutive fractals. The first has completed its target. It has then corrected itself. Note that the correction is not necessarily to the support line. It is very shallow and is immediately followed by new higher prices, which tells us that we are now in a new fractal. So we use another indicator to measure it. The second fractal fractal also reached its target and then corrected to its support line. Fractals can be more than 1 or 2. This is an example of 4 consecutive fractals. The more there are, the stronger the movement is expected to be. The size and shape of the fractals vary over a range. This is an example of a longer fractal that has reached its target and then corrected but did not reach the support line. Once the target has been reached, we enter a correction. The correction can end when the support line is reached. If the price does not reach the support line and goes above the target reached, this is a new fractal. Each new fractal requires a new indicator. In summary, with Enigmera, you won't simply monitor the markets, you'll fully understand and analyze them. This comprehension will lead to effective action. Enigmera serves financial analysts and consultants who require dependable insights to share with clients, as well as investors who demand the utmost precision and assurance. Thank you for watching this video. Whatever questions you may have, please feel free to contact our support team. Finally, we would like to show you some real examples of how Enigmera works. Join us now